loving, loving, loving you. Yeah, yeah, yeah. Oh, every day's a good day. I put my life in your hands, Allah. You will always lead my way. Oh, every day's a good day. I give my life to you, Allah. You will always lead my way. Oh, I love this morning breeze. Love how we can revive my soul. I'm so glad to be surrounded by the people I love, filled with happiness. Just wanna give my all and be all that I can be. Share all my love and energy, yeah. How many things that I can do, many things, yeah, to make me feel so close to you. Oh, within my heart can't be removed. Within my heart when I'm loving, 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 loving you. Yeah, yeah, yeah. Oh, every day's a good day. I put my life in your hands, Allah. You will always lead my way. Oh, every day's a good day. I give my life to you, Allah. You will always lead my way.
سبحان الله ملك الكون، لولا فضل الله ما كان يكون. وكلت أمري ديما وكل يوم لله 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 لله. سبحان الله ملك الكون، لولا فضل الله ما كان يكون. وكلت أمري ديما وكل يوم لله 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 لله.
Oh, every day's a good day. I put my life in your hands, Allah. You will always lead my way. Oh, every day's a good day. I give my life to you, Allah. You will always lead my way. Oh, every day's a good day. I put my life in your hands, Allah. You will always lead my way. Oh, every day's a good day. I give my life to you, Allah. You will always lead my way. Oh. I praise Allah for sending me you, my love. You found your home, it's here with me, and I'm here with you. Now let me let you know, you've opened my heart. I was always thinking that love was wrong, but everything was changed when you came along. Oh, and there's a couple of words I wanna say. For the rest of my life, I'll be with you. I'll stay by your side, honest and true, to the end of my time. I'll be loving you for the rest of my life, through days and nights. I'll thank Allah for opening my eyes, now and forever. I'll be there for you. I know it deep in my heart. I feel so blessed when I think of you, and I ask Allah to bless all we do. You're my wife and my friend and my strength, and I pray we're together in Jannah. Now I found myself, I feel so strong. Yes, everything was changed when you came along. Oh, and there's a couple of words I wanna say. For the rest of my life, I'll be with you. I'll stay by your side, honest and true, to the end of my time. front of me, I strongly feel love. And I have no doubt, and I sing it loud, that I will love you eternally. Rest of my life, I'll be with you. I'll stay by your side, honest and true, to the end of my time. I'll be loving you for the rest of my life. Through days and nights, I'll thank Allah for opening my eyes. Now and forever, for you, I know it deep in my heart. So far from you, yet to me you were always so close. I wandered lost in the dark. I closed my eyes to all the signs you put in my way. I walked every day further and further away from you. Oh Allah, you brought me home. I thank you with every breath I take. Alhamdulillah, Alhamdulillah. All praises to Allah, all praises to Allah. Alhamdulillah, Alhamdulillah. All praises to Allah, all praises to Allah. I never thought about all the things you have given to me. I never thanked you once. I was too proud to see the truth and prostrate to you, until I took the first step, and that's when you opened the doors for me. Now, Allah, I realize what I was missing by being far from you. Alhamdulillah, Alhamdulillah. All praises to Allah, all praises to Allah. Alhamdulillah, Alhamdulillah. All praises to Allah, all praises to Allah. Allah, I wanna thank you. I wanna thank you for all the things that you've done. You've done for me through all my years I've been lost. You guided me from all the ways that were wrong. Indeed, you gave me hope. Oh Allah, I wanna thank you. I wanna thank you for all the things that you've done. You've done for me through all my years I've been lost. You guided me from all the ways that were wrong. I wanna thank you for bringing me home. Alhamdulillah, Alhamdulillah. All praises to Allah, all praises to Allah. من صليت بكل الأنبياء، يا من في قلبك رحمة للناس، يا من ألفت قلوبا بالإسلام، يا حبيبي يا شافعي يا رسول الله، بأمي وأبي فديتك سيدي، صلاة وسلام عليك يا نبي. حبيبي يا محمد أتيت بالسلام والهدى محمد، حبيبي يا محمد يا رحمة للعالمين يا محمد، يا من حليت حياتنا بالإيمان، يا من بجمالك علمت الإحسان، يا من نورت قلوبنا بالقرآن، يا حبيبي يا شافعي يا رسول الله، بأمي وأبي فديتك سيدي، صلاة وسلام عليك يا نبي. حبيبي يا محمد أتيت بالسلام والهدى محمد، حبيبي يا محمد يا رحمة للعالمين يا محمد. صلى الله على خاتم الأنبياء محمد، محمد رحمة للعالمين، رحمة للعالمين، محمد، محمد رحمة للعالمين، رحمة للعالمين، محمد، محمد رحمة للعالمين، رحمة للعالمين. حبيبي يا محمد أتيت بالسلام والهدى محمد، حبيبي يا محمد يا رحمة للعالمين يا محمد، حبيبي يا محمد أتيت بالسلام والهدى محمد، حبيبي يا محمد يا رحمة للعالمين يا محمد.
Ya, moderator, we can start.
Assalamualaikum.
Waalaikumsalam warahmatullahi wabarakatuh.
My voice is clear?
Yes, very clear, Mr. Qanit.
Yes, very clear.
Thank you.
We can start, Sister Husnul.
Should I share my presentation?
We still have your presentation material, Mr. Qanit.
I can share my presentation. Hold on, please.
Okay. mm, We will open the event previously. Brother Qanit and Sister Husnul Hatimah will start the opening. After that, maybe I will share something, and then the lecture will start with you.
Okay. So I'm okay.
Okay, Sister Husnul?
Okay. Okay. Is it clear enough, my voice?
Yes, very clear.
Okay. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi
Waalaikumsalam.
Good morning, everyone. Good morning, distinguished guests, respected scholar, honorable lecturers, our dear students, ladies and gentlemen. First of all, let's thank to God Almighty for the blessing and mercy and salawat salam to our Prophet Muhammad Sallallahu Alaihi Wasallam. Please, peace be upon him. Ladies and gentlemen, it is such a great honor and pleasure to welcome all of you on today's public lecture. Yeah, we are going to discuss book discussions entitled Breaking the Trap, Debt, Inflation, Interest, and Poverty. Ladies and gentlemen, this event is organized by the Indonesian Association of Islamic Economists, or IAEI, of East Java Provincial Board in collaboration with the Policy Research Initiative for Zakat-Based Interest-Free Economy, or PRICE. I would like to also to welcome Mr. Qanit Khalilullah, as
Welcome.
the author of this book, ladies and gentlemen, our sincere gratitude is extended to also first to the chairman of DPW IAEI East Java Province, Ketua DPW IAEI Jawa Timur, Dr. Muhammad Khairul Anwar, and the second one, Ketua Komisariat IAEI Universitas Kiai Haji Mukhtar Syafaat atau UIMSYA Banyuwangi, sekaligus sebagai Dekan FEBI UIMSYA, the chairman of IAEI Komisariat UIMSYA Banyuwangi, and also the Dean of Islamic Economy Faculty, Dr. Leli Ana Ferawati Ekaningsih. The third one, we would like to express our sincere gratitude to our Ketua Komisariat Universitas Islam Zainul Hasan, UNZAH, Ibu Sahida Iti Soma Billah MA, and also the chair of Komisariat Universitas Islam Zainul Hasan, or UNZAH. And the fourth one, Ketua Komisariat IAEI Universitas Muhammadiyah Jember, yang merupakan koordinator program studi ekonomi Islam, the chair of IAEI Komisariat of Muhammadiyah University Jember, as well as the head of Islamic Economic Study Program, Ibu Miftahul Hasanah, MAE. Ketua Komisariat IAEI Komisariat STAI Al-Utsmani Bondowoso, sekaligus Ketua STAI Al-Utsmani, the chair of Komisariat IAEI Komisariat STAI Al-Utsmani, Ibu Dawi Mati Solihah, MA, and also perwakilan or the representative of IAEI Universitas Nurul Jadid Paiton, kandidat Dr. Bapak Ainul Yakin, MA, di sini representative of IAEI Management of Nurul Jadid University. And once again, thank you very much for the support in organizing the public lecture, breaking the trap of debt, inflation, interest, and poverty today. And also we would like to express our gratitude to the rector of UNHAS Jember, Kiai Haji Ahmad Siddiq University Jember, Bapak Profesor Hepni, and also the Dean of Faculty of Economic and Business Islam UINHAS Jember, Bapak Profesor Ubaidillah, for enabling and supporting the establishment of the International Office of FEBI UINHAS Jember in strengthening the quality of education, teaching, and international community engagement. Ladies and gentlemen, Let's start this agenda with Bismillahirrahmanirrahim. Bismillahirrahmanirrahim. Before we begin the main sessions, please allow me to introduce the distinguished figure. Yeah, Ibu Dr. Hairunisa Musari as the Secretary General of the Indonesian Association of Islamic Economic East Java Provincial Board and Coordinator of the International Office of Faculty of Islamic Economic and Business UINHAS Jember. Bapak Ibu hadirin yang kami hormati, sebelum kita masuk ke acara bedah buku, kita mari sambut opening speech oleh Ibu Dr. Hairunisa Musari sebagai Sekretaris Jenderal dari IAEI Komisariat Jawa Timur, sekaligus koordinator dari International Office dari Fakultas Ekonomi dan Bisnis Islam Universitas Islam Negeri Kiai Haji Ahmad Siddiq. For
Ya,
the time is yours.
thank you, Sister Husnul. My voice is clear ya.
Yes, Alhamdulillah.
Assalamualaikum warahmatullahi wabarakatuh. The
Waalaikumsalam.
Honorable Rector of Universitas Islam Negeri Kiai Haji Ahmad Siddiq, the Honorable Dean of FEBI UINHAS, and the Honorable Chairman of the Indonesian Association of Islamic Economists for Provincial Board of East Java. Then we would like to express our gratitude to the representative of Universitas Kiai Haji Mukhtar Syafaat Banyuwangi, Universitas Islam Zainul Hasan Genggong, Universitas Muhammadiyah Jember, Stai Al-Utsmani Bondowoso, and Universitas Nurul Paiton as the co-host for our international public lecture this morning. I learned about Mr. Qanit Khalilullah and his book a month ago when I visited the sixth international conference, global forum on Islamic economics, finance, and banking held by the Ahmad Institute of Islamic Economics and Finance, University of Management and Technology, Lahore, Pakistan. And for this reason, I also express my gratitude for the president of UMT, the rector of UMT, and also the director of the Ahmad Institute on Islamic Economics and Finance, UMT, Prof. Tausif Azid, for organizing the global forum, so I may know about the brother Mr. Qanit Khalilullah and his book. And I believe this book is a search for better policies, schemes, or models for Islamic economics and finance. Therefore, it is worth studying the ideas from this book. So, because this is the time near with the Jumu'ah prayer, so I will give the session to the moderator so we can directly to understand, to listen about the idea of this book for us. We can start, Bismillahirrahmanirrahim, and move to the moderator.
Okay, thank you very much, Ibu Dr. Hairunisa Musari, for the inspiring and insightful opening remarks. Ladies and gentlemen, now we come to the next session, the main session, about the presentation and discussion of the book Breaking the Trap Gap Inflation, Interest and Poverty. We are here with Mr. Qanit Khalilullah, yeah, as the author, yeah, and as the president of PRICE, yeah. Beliau di sini sebagai penulis buku ini ya, Presiden Prize yang akan mempresentasikan tentang bukunya ya. Ini akan bedah buku di sini tapi sebelumnya but before we come to the main session, the presentation, I would like to inform you a short biography of Mr. Qanit Khalilullah ya. Beliau di sini ya, having over 25 years of diversified experience working with A.R. Ferguson, foremost FMCG, Unilever Pakistan, and Yvonne of Etisalat Telecom Group, coupled with charter and management accountancy qualification of prestigious Institute of UK and Pakistan. Yang jelas beliau ini berasal dari Pakistan ya, tapi sudah menginternasional karya beliau dan juga sudah bekerja sama dengan berbagai pihak. Member of Pakistan Accounting Standard Board Technical Advisory Group. Ya, di sini merupakan member dari Accounting Standard Board Technical Advisory Group and former member of ICAPS Accounting Standard Committee. So, today Mr. Qanit Khalilullah is the president of PRICE. Jadi PRICE itu adalah singkatan ya. Kepanjangannya adalah Policy Research Initiative for Zakat-Based Interest-Free Economy. This institution is dedicated to promote and establish a zakat-based, riba-free economic system as a sustainable alternative. Bapak Ibu sekalian ya, jadi beliau kali ini akan membedah bukunya ya, mempresentasikan isi dari bagaimana menghancurkan jebakan debt inflasi ya, riba dan juga kemiskinan di sini ya. Jadi you know that the world today continues to face complex economic challenge. So debt has become a common instrument in both personal and national economies, while inflation steadily reduces purchasing power and deepen economic uncertainty. At the same time, interest-based financial system often create structural inequalities that disproportionately affect vulnerable communities. So I hope that our today discussion will inspire meaningful dialogue, academic reflection, and constructive solution for a more equitable future. Buku ini sebetulnya lumayan agak berat ya, kalau boleh saya terjemahkan. Saya sebagai host di sini, tapi saya harap dengan kehadiran beliau di sini kita bisa membahas bersama ya. Beliau akan menyampaikan kepada kita sudut pandang beliau tentang apa isi yang dimaksud dengan breaking the trap, hutang, inflasi, riba, dan kemiskinan di sini. So I hope this discussion will inspire meaningful dialogue, academic reflection. Yeah. Okay. Thank you so much. And let's invite, ladies and gentlemen, now let's invite, yeah, and welcome our author, Mr. Qanit Khalilullah, FCA. Time is yours.
Thank you, Jazakallah. I'm honored to present this presentation in front of your audience. Can I share my presentation?
Yeah, sure.
No, please.
We can see your presentation, Mr. Qanit. You are the co-host.
Hold on, please. Yeah. You can see my presentation?
Yes,
Acha, okay, thank you.
the first slide.
First slide, okay, good. And slides are moving. This is on the second
Yes,
slide.
yes,
You can
exactly.
see the second one. Okay, good. Let's move. Thank you, Ji, Jazakallah, for giving me this opportunity. Today, I am going to give you a brief background of this book. Basically, this book is discussing a very, very important thing. The modern economic challenges, for example, increasing debt, which is a huge problem across the world, continuous inflation, financial and economic instability, these grave challenges the argument of this book is that these challenges are basically embedded on the money system, how money is created and how money is distributed. The monetary side of the economy, which is nowadays is much more important compared to the fiscal side. And the central argument of this book is these outcomes which are seeing across the world: debt, inflation, interest, poverty in the midst of excess, is basically dependent or is basically triggered by the money system which we have. And not only we are discussing this issue, but we are proposing a solution, which is a mainstream solution. Many renowned economists, for example, Milton Friedman, Irving Fisher, many current economists are, in support of this proposal, a sovereign money system. So first of all, on the first slide, I was discussing the very important thing which normally misunderstood by financial and economic people. In generally, people think they are of the opinion that money is created by the central bank or the state. But in the current system, money is created, most money is created by, hold on, please. You can see my slide? Okay, thank you. In the current system, most money is created by commercial bank under fractional reserve system. Although historically, money creation has been considered a prerogative of a state for thousands of years, even when there were commodity monies, the coins were stamped by the state. Roman dinar, Islamic state dinar, the coins of gold and silver. But recently, this power has been transferred from sovereign as a sovereign right to commercial banks, and they are creating money by issuing loans. So banks, the central idea of this book, the banks are not basically an intermediary, just intermediary. They are creators of money. And nowadays, they are creating more than 95% of the money in the deposit form, which is the dominant form of payment. The process is very clear and very straightforward. When you deposit any amount in a bank supposed to keep some reserve in cash. So if you go to ATM, you can collect cash, and for example, 5%, and 5% they keep reserve in the central bank, in the state bank, and the remaining amount they loan out. And so the money immediately doubles. The person who deposited the money has, for example, 100,000, and when they loan out 90,000 rupees, the money doubles 190,000 rupees. And the borrower who took the loan, when he spent the money and paid this amount to any vendor or any employee, this amount again reaches to another bank, and the process repeats, and the money triples. This process goes on, and with multiplier impact, if there is a 10% reserve ratio, money banking industry as a whole can create money up to 10 times. And this is a very recent phenomena because if I will give you a story or background of banking, in 19th, 17th century up to 17th century, normally state coins are used for medium of exchange. In 17th century, these coins, economy expanded, and people used to go to the goldsmith and deposited these coins with them, and these goldsmith issued receipts to them, and these receipts quickly converted into medium of exchange. Instead of going to collect a coin and pay the amount, they started to use these receipts. And the process is straightforward. Money had been converted from coins to paper currency, but it's a private currency. So there are two issues. One, some goldsmith started to increase the number of receipt. For example, if they have 100 coins, they issued 200 receipts. And this resulted in inflation, not only, but this was considered a fraudulent activity at that time. And people, those goldsmiths who are infamous, people reach to them. They don't have coins, and they had to go to jail. In present terms, bank run, and then Central Bank of England and this UK, which is the dominant power at that time, they said they issued a law that no private institution can issue any note. So the private creation of money, which started in 17th, 16th, 17th century, it has stopped. And this right has been reserved for the Central Bank of England. And since England was the dominant power at that time, UK, other European countries, US followed it, and the private creation of money started and eliminated. But during last 200 years, the money, the transaction which were being made initially in coins and then in receipts, and sovereign receipts, they are transferred from receipts to the banking numbers. Now, most transaction, almost 95% of the transaction in the world are being executed, are being made in accounting numbers, in banking numbers. I'm sitting in Pakistan, Islamabad. I can make any payment through my bank account to Indonesia, to America. The velocity of the payment is fast. It is more convenient. It is good, faster transactions. But at the same time, bank has the ability to create money through double accounting and the double entry system. They, like these goldsmith, they issue more loans compared to the sovereign money they have. And in the world now, all 5 to 10% transactions, which is hard money, are being made on state bank, on central bank currency or state currency, and 90%, over 90% of the transactions are being made in bank money, and bank have very little money to support this transaction. So this system is fragile. And whatever I'm saying, it's not a strange thing. It is available in economics book, and you can see the slide. This is Central Bank of England bulletin, and they said that when a bank makes a loan, for example, to something, to taking out a mortgage to buy a house, it does not typically do so by giving them thousands of pounds worth of banknote. Instead, it credits their bank account with a bank deposit of the size of the mortgage. At that moment, new money is created. So, position is very clear. Okay, most of the money in the present era is being created by commercial bank whenever they issue loans. And logic is clear. Okay, if I make a payment to someone, my account is reduced. But when bank issue a loan to someone, no one account is reduced. It's a new, fresh money which are being created by the commercial banks. And a very famous economist, John Kenneth Galbraith, he said the process by which bank create money is so simple that mind is repelled. Okay, although it's very simple, but people, don't understand it. Okay, who is creating the money? There is a survey conducted in UK a few years back, and people ask about the money they deposit into the bank. 30% people are of the opinion that this money is inside the bank, and they think they have the money in their vaults. 60% of the people are of the opinion that bank give loans from the money they deposited. Only 10% of the people know the fact that bank create money through loans in the present era. Whenever bank issue loan, new money is created. If central bank print no money, but commercial banks are extending loans, money supply will increases. The picture is available in the Central Bank Bank of England bulletin, where central bank balance sheet, commercial bank balance sheet, and the consumer balance sheet are presented. And very clearly, they are showing whenever bank issue loans, new fresh money, M1 money, there is no change in central bank balance sheet. Commercial bank balance sheet increases, expanded. On the one side, they recorded loan to be paid after a year or after 2 years, and they credited their account, put the money in their account for immediate payment. And money is medium of exchange, so the new money is created at that time. So things are very clear. But now in the first chapter of the book, we discuss this issue, and I think it is nowadays it is widely discussed. Then we discuss about the outcome of this process. When you transfer a sovereign right, the sovereign or public right, a public responsibility. There are, something which have to be discharged, which have to be conducted by the public. For example, defense. You cannot give it to the private sector. For example, dispute resolution courts. You cannot assign this responsibility to private sector so that they can maneuver this thing. Likewise, money creation is a public good. It should not be transferred to the private sector for profit motive. So there are structural problems as a result of this change from sovereign money to private money creation along with that. Basically, banks, like any commercial organization, they want to increase their sales, their revenue, their profit. And what is their sales? Their sales is their loan issuance. Whenever they issue loans, they earn money because in making transaction they have they make very little money, so they want to issue much as much loan as possible as a commercial organization. But the downside of this thing is that when they issue loans, they create money, they put money into your accounts. They don't give you any commodity, any soap, any bread. They put money into account, fresh money. So there is an inclination because they want to make profit. They want to issue much more loans to the people, and this creates inflation. What is inflation? Inflation is a monetary phenomena when production is not increasing, but you are increasing the money supply, inflation, follows. So when this inflation emerges, the central bank across the world or the state have a tool to control the money supply indirectly. They control money through interest rate mechanism, policy interest rate. They say if you are issuing too much loans and there is an inflation which is badly hurting the poor people, then they increases the interest rate, and this indirectly controls the money supply. But when they increases the interest rate, it hurts the businesses, it hurts the consumer. So central bank have two choices: either inflation or unemployment, downside of the of economic activity. So in this environment where money is being created by commercial banks, along with that, on the one side, money is growing much faster than the real production, and on the other side, debt is increasing, continuously increasing. I will show you the slides to show, and this money is goes to the asset side. So economy is financialized, means asset owners earn much more than productive investment, and this leads to wealth concentration, huge wealth concentration, which is not evidence in the recent past. Extreme boomer cycles. This money creation power, as per Austrian economic theory, when bank thinks the economy will be improving, they pump the money, and this money goes to assets increases, asset prices increases, commodity prices increases, inflation, people salaries increases, but the whole system is based on debt and it's on trust. When there is an issue, when there is an inflation, for example, just central bank increases the interest rate, the economy goes on the other side, and then we will face recession and then depression. So any major problem can hurt the economic cycle, and we can see this boom bust cycle, this recession, inflation and deflation during last 50, 60 years, after 5, 10 years, inflation, then deflation, and then financial fragility. Banks, are this whole system is based on a very narrow base. If more than 5 to 10% people go to the bank and ask their money, bank don't have money, and every year in America, 5 to 6 banks are bankrupt. So they are profitable, but they don't have cash money, and there are social and other issues. In this book, we particularly focus on Pakistan, how and apply this model, the full reserve banking, into Pakistan. So there are one or two, three slides on Pakistan specific, and then we go to the world scenario. During in Pakistan, you can see the money. This is the slide where money and domestic debt is going side by side. During last 15 years, money supply, which is wherein 90% or more than 80% is bank money, deposit money, part of M1, both domestic debt and money has been increasing steadily. With 5%, 5 billion trillion rupees, they have increased, the debt has increased to 55 trillion and money has increased to 40. This is not coincidental. This is closely linked with each other. Every month, government of Pakistan, because it's a huge tax, huge interest burden, they go to the bank, commercial bank, took a loan of 500 billion rupees and return it back in the form of interest. When this return or profit reaches to the account, it creates inflation, which is badly hurting the poor people, because inflation is not bad for everyone. People who are asset holders, who are big large companies, who have the capacity, who they are beneficiaries of the inflation, because their asset prices increases. Those people who are on fixed income, who don't have asset, they are badly hurt with this phenomena. So side by side, money and debt are increasing. On the one side, we are facing inflation, particularly vulnerable class of our societies. In the other hand, we are putting burden on our future generation, for which we have no moral right. But this debt and money increasing very steadily. And this has a huge impact on the Pakistan budget. Almost 50% of the tax amount, 48% of the tax amount is wasting or is going into the debt servicing or interest payment. And this payment is not on foreign debt. 90% of this payment is on domestic debt. It means it depends on our internal policy. This amount is many times higher compared to any other expenditure. Basically, here education and health are not available because it's a provincial subject, and I'm giving you a federal budget snapshot. But this amount is many times higher than educational budget, than total educational budget of Pakistan, health budget, defense, everything. On day one, when government have to pay 50% amount to the interest, then they don't have capacity to do constructive work, and they take more loans. And this is a phenomena: bank deficit, more loans, more interest, more loans. And during last 50 years, money supply has been increasing in Pakistan by 15% per annum. 15% is not considered a gigantic amount, but if you apply it consecutively for 50 years, money supply has increased by 1,200 times. And in comparison to money supply, the real GDP, which has been increasing by 4.5% per annum, has increased to by 9 times. If you divide 1,200 by 9, so it means that everything, not everything, but price level have increased by more than 100 times in last 50 years. And this is, as I said you, this is very, very dangerous for poor people, because they are, living on fixed income. They don't have, we are basically, the inflation is stealing money, hard-earned money from them. First of all, they have to pay 17, 18% in indirect taxation, which should not be applicable on Pakistan, but this is not our topic. And then they have to pay, they have to surrender their hard-earned money into inflation. And this phenomena is not, now I will expand this phenomena to uh, global scenario. During last 25 years, money supply has been increasing across the world by 7% per annum. If you see in times terms, during last 25 years, money supply has almost increased by 5 times as compared to real production, which has been increasing by 3.2%. It means the real production has doubled during last 25 years. So money supply has been increasing by more than double compared to real production. And so this inflation is a structural problem. It's not a policy choice. Sometimes there are some issues from the supply side, for example, COVID. But the money supply, which has been increasing by commercial banks' loans activity, it is a structural problem of debt-based money. So on the one side, the money has been increasing, and the other side, debt has been increasing. We can see the worldwide debt, which is it's an IMF paper. During last 50 years, it's a real debt in terms of GDP. In 1950, the real debt is around 100% of the GDP. Now in 2022 it has increased to 238 times. There are three types of debt. One is governmental debt. The second one is household and business debt. Household debt, which is very dangerous for advanced economies, it is almost negligible in 1950-60, but now it has increased to 35% of the GDP. Every house which was owned 60, 70 years back, every car, every student has been studying on loans. So the monetary system or the interest system has been entrenched across the economy. With 1% interest rate, it is, very, even if central bank increases interest rate by 1%, it puts disproportionate burden on these people, particularly household. So the debt is increasing, and this debt is increasing the asset prices. Bank create new money. Not this that this inflation is not only applicable on commodities; it is applicable on assets. So it is increasing the wealth disparity. Bank create new money through lending. More money in the economy, more money chases limited assets, real estate, particularly. So the housing is unaffordable nowadays for particularly in Western economies. They have to go to the mortgage. Prices have increased by almost 10, 15 times during last 50 years. And so the wealth concentration, there is extreme wealth concentration across the world. It's a wealth inequality report. 1% top people in the world have almost 40% of the wealth across the world, and the bottom 50% have only 1 2%. It's abnormal in the history where 12 richest billionaires in the world have the wealth equal to the bottom half of the humanity. 4 billion people living on the world. And in advanced country, situation is worse. In America, three richest people, the owners of Meta, Tesla, and Amazon, have more wealth than bottom 50% of Americans, which is a very advanced country. So Minsky said this system, the capitalism, creates poverty in the midst of plenty. I said, okay, this is not capitalism. Capitalism good, market economy good, innovation, these things are the outcome of capitalism. But there are two main system who are creating this issue. One is money system, and the other one is taxation system. Today we are discussing the money system, which is which has been changed during last 50 years from a sovereign money system to the private sector money. And this money is creating bubbles. Bank create new money through loans. The artificially cheap credit available encourage more borrowing, raising debt and speculation. Then many investment are made which are not feasible, and they are malinvestment. Boom, inflation, and then the situation downturns, turning point, higher interest rate as a result of inflation, lending slows, reserves, asset bubble burst, debt crisis emerge, economic recession. So this boom and bust cycle is a common phenomena of the modern economy, debt-based money creation. And you can imagine if you are uh, injecting money and extracting money in a body continuously, then this body cannot be stable. And this is the example of our society where money is blood, which is continuously injecting under the profit motive by the commercial bank. They create inflation. This creates inflation. This creates asset price bubble, wealth inequality, uh, boom and bust cycles, and then when situation reverses, this creates they are extracting money from the economy. So this boom bust cycle is the direct result of money creation power. And secondly, the banking crisis financial system is very fragile because it's based on 5 to 10% reserve. If more than 10% people go to the bank defaults. So the main issue is that if the depositor demand immediate access of the money, bank don't have because bank keep only a small fraction, 5% cash, 5% reserve in the state bank. Most depositors lend on long-term deposit. It's a structural problem because there are banking are doing two things. One is we are depositing, they are a storekeeper of our money, they are making transaction on our behalf, medium of exchange, but they are transferring this money over 90% money to others. There is a friction between these two things because they take money on a short-term basis, immediately withdrawable and risk-free basis. But they lend money or invest money in risky businesses on long-term or ventures. So there's a liquidity and risk mismatch, and which creates vulnerability in the financial system. And there are social consequences, wealth inequality, social stress, many things, and environmental stress because when bank issue loan, they want not only loan, it's a debt-based money. They not only loan, but they want more money in terms of profit or interest. So there is a continuous pressure on extraction of more resources. Continuously growth is required to run the system. If there is no continuous growth, then automatic this system collapses. So there is a tremendous pressure on social side and environmental side of this money and taxation system. The situation is very clear. This is the Central Bank of England governor, Lord Mervyn King. He said after 2018 crisis, change is, I believe, inevitable. The question is only whether we can think our way through to a better outcome before the next generation is damaged by a future and bigger crisis. This crisis has already left a legacy of debt to the next generation. We must not leave them the legacy of a fragile banking system too. So the situation is clear. These people are sitting inside the banking system. And with the main, banking, Central Bank of England, Fed, they are saying that this system is fragile. It has to be corrected. So now I come to our proposal, which is the mainstream proposal, not our proposal. Many renowned economists, for example, Milton Friedman, who is the most renowned monetary economist, was in favor of future of full reserve banking. Edwin Fisher have written a very very good book, 100% Money on full reserve banking. Basically, this proposal is a proposal of sovereign money. The money which has been a sovereign right across the century, it has to be returned to the state. No commercial bank where the money creating capacity will be taken from the commercial bank, and money will be like cash or hard money, electronic money will be created by state bank. And this money is to be created is strictly tied up with the GDP growth. So there is no inflation and no deflation. And secondly, this money will be created without debt, so there is no continuous debt trap on us. There's a very, it's a, it's a very difficult to see the state who is the owner of the money, who can create money every month, they go to the commercial banks and take loans, and they put debt burden on the future generation and inflation pressure on on their poor. So the rules are very clear. Sovereign money to be right to be returned to the state, and this money will be created without debt and according to the real production, because money is medium of exchange. It's not for growing things. It's a medium of exchange. So we don't want any inflation or any deflation. It basically removes the inherent conflict between the main banking functions: storage or medium of exchange and lending on investment. Money and debt will be separated. Presently, it is a two side of one coin. So what will result? Financial stability, public control, real economic growth, and fairness and prosperity. There may be two options of full reserve banking or sovereign money. One is, for example, everyone has an account on central bank digital money, exclusive digital money, or the monopoly. But it will create, it will hurt the innovation which are being made by commercial banks, faster payment, good transactions. And this, also create a problem. There will maybe more surveillance from the state side. So the option of full reserve banking is very, very, seamlessly will take the power of money creation from commercial bank to the state without any major disruption to the banking sector. The rule is clear. What the banks will have to keep the reserve in the state bank 100% in the central bank. If they have the deposit of 30 trillion, they will have the account in the state bank by 30 billion rupees. So they will not be able to create money. Like when they transfer money from one account to another account, when they issue loans, one account will be minus, will be reduced, and the other account will be increased. For example, if a widow want to invest money to earn profit, his account will be reduced or minus, and this money will go to to a business to earn a return. Process is very clear. And this had a very strong support from the prominent economist Irving Fisher. He said, "I have come to believe that the full reserve banking plan, properly worked out and applied, is incomparably the best proposal ever offered for speedily and permanently solving the problem of depression, the minimizing of depression, because depression is a major issue for across the world. Every 5 to 7 years, money economy is unstable, and we are facing depression, inflation cycles. The payment of government debt, when government take back the right of sovereign money, there will be a major reduction in government payment immediately and going forward, and the inflation will reduce because money will be creating with public announcement, with a rule based it will be attached with the GDP growth. For example, if in a country GDP is growing by 4 to 5%, then money will be increased by 4 to 5%. So there will be no inflation, and this money will be created without debt. So it's an additional source of income for apart from taxes for government. It's a sign-on-rich profit. Whenever government creates or prints a note of a dollar or rupee, it is a sign-on-rich profit for them. But this money will be is in quantity is very less than 10-15%. The 90% money is being created electronically in debt form. So when this electronic money will be transferred to the sovereign, then government has another revenue option. And he said that the unification of our two sorts of money, there are two types of money. People cannot differentiate between them. One is hard money, state money, and the other one is back money. But banks don't have sovereign currency to back them. They have only 5%. So this two confusion will be eliminated. And most importantly, he said that government would recapture its lot franchise and regain its sovereign power over money as granted to it by the Constitution. Historically, it has always been a government right. So the full reserve banking system will significantly, is the IMF paper. Irving Fisher wrote this thing 70, 80 years, 100 years back. But IMF paper, this paper has been written by two economists, Banis and Komhoff, and they use the US data of banks, household, manufacturers, and government, and DSG model. and they found out the results significantly reduce business volatility, which is a major issue for them. Eliminate bank runs, because in full reserve banking, when banking industry has a full reserve in a state bank, the bank run will structurally be eliminated. A large reduction in both government and private debt, and people are expecting that there will be reduction in money supply, but their results prove otherwise. The results don't seem to indicate a restrictive credit supply or money supply is available, and macroeconomic effects are impressive. In an advanced economy like US, 10% of the GDP, because when debt is removed and compared to in place of debt, equity things will be introduced, GDP will be significantly reduced. This is the Pakistan. We have written one in the first chapter. We have given current banking system, its economic and social consequences. Second, this full reserve banking, and third, and we applied this model into Pakistan. In Pakistan, this is the slide where banking industry have almost 60%. They have 5% cash reserve against deposits. 60% they loaned out to the government, 25% to the private sector, and 10% other assets, for example, buildings, cars, and other assets. So in full reserve banking, the bank, will be no change in legal structure, but there will be those two sections or two types of work they will be carrying out. One is risk-free deposit section. The banks will have to have 100% reserve in a state bank for every deposit they have. And secondly, there is an investment section, which is doing a real intermediary work, and these money and debt or money and investment will be clearly separated. Whenever you increase the reserve ratio from 5 to 100%, bank don't have cash to increase the reserve ratio. They have government bonds, they have treasury bills, they have sukuk, many other things. So these receipts will be transferred from commercial bank to the central bank. On the one hand, central bank is issuing risk-free reserve account, which is not inflationary because it will not be in the hands of the public. It will be for interbank transaction inside the state bank. And the other hand, the central bank is taking the debt-bearing documents of the government. So that structurally, in Pakistan, almost 80% of the government debt is lying with the banks. So structurally, this domestic debt will be eliminated. It means if you eliminate or substantially reduce domestic debt, 40 to 50% of the interest costs, which is wasting our tax money, will be eliminated. The debt, interest, and then deficit, and this will result to elimination of inflation, because inflation is coming out year by year because of the government loans. Government go to take the loans to fill the deficit, and whether it should be very clear, okay, if they print the money, central bank print the money, or they take money from the commercial bank. In both cases, money supply will increase and we face inflation. So structurally, in our book, we prove that by implementing full reserve banking system, not only the domestic debt, which is consuming most of the resources, not foreign debt, because foreign debt is, although is there, but it is consuming 15% of the interest cost. 85% of the interest cost is being consumed on domestic debt. So the domestic debt will be eliminated, and as a result, inflation, interest, deficit, and ultimately, this result for Pakistan is elimination of 6,000 billion rupees interest costs will be saved. Around, if central bank will create money without that up to the GDP level, which is around 4%, this will be an additional sum of money for the government, around 2,000 billion rupees. Money value will be stable, 100% protection of depositors. Nowadays, we have deposit insurance. For example, up to 1 million rupees over and above, there is no protection. In case of any bank default, people are in a difficult position. But in full reserve banking, 100% money protected, because whatever we deposit into the bank, banks have the same money in the central bank, same account. So even if their investment side faces a loss, there will be no impact on money side. there will be clear separation between money and debt and investment. A specialized investment and section for banks. Presently, the major work of the bank is to basically accumulate the deposits and deposit or the money for investment and put in for investments and productive work. But nowadays, they are only giving this money to the government. In Western side, they are only giving most of the money is going, 85% of the money is going to real estate, only increasing the prices of the houses. In Pakistan, every month 500 billion rupees are given to the government just to pay back interest. This is the work which they are doing. So in full reserve banking, when the government debt will be mostly eliminated, then government the banks will have an opportunity to do a productive work. They extend the loan the investment for the private sector. In our book, we have shown the current amount which is given to the private sector will be almost be double, and there will be no need of interest rate policy. Why? Because money is being directly controlled by the commercial bank. There will be no need for indirectly influencing the money supply, and this transition should be very seamless. Just central bank has to increase the reserve ratio from 5 to 100%. As a result, the government bonds, the treasury bills will be transferred from commercial bank to central bank, and then bank. There will be no interest or profit on deposit money like cash, because there is no justification of paying interest or profit on money which is available every time. So transition is very simple. The most renowned economists, Milton Friedman, said there is no technical problem in achieving a transition from our present system to 100% reserve easily, fairly speedily, and without any serious repercussion or financial or economic markets. He said, who the most renowned economics. When he said what is the reason of its not implementation? The vested political interests opposing it are too strong, and the citizen who would benefit both as taxpayers and participant in economic activity are too unaware of its benefit and too disorganized to have an influence. People don't understand money creation. People don't understand who is creating, who is taking benefit. And now I'm going to end this presentation. The last slide is this proposal, which is the mainstream proposal, is very much aligned to the economic system, the Islamic economic ideal Maqasid Sharia. In this system, there is no debt-based money creation. In the present system, 90% money is being created by commercial bank whenever they are making loans or they are doing investments. This is this system is basically creating the debt. That's why in Pakistan, I don't know about your country, but in Pakistan, 90% of the contracts which are being made in the form of ijara and murahaba, when they come to the IFRS or modeling, these agreements are considered debt-based contracts, because currently in the current system, Islamic Bank will have to create. They are creating money under fractional reserve system, and when they create money, this is an unrestricted. This is not an unrestricted right. They will have to attach their money creation capacity to the central bank policy rate, because central bank policy rate is basically controlling the money across an economy. So in this system, there will be no debt-based money creation. Money is created by the state, not through debt. This eliminates riba interest at the source. In our opinion, currently in the current system, fractional reserve banking system, banks are not able to do any profit loss sharing. Why? Because they have money. They are sitting on the money, which is immediately withdrawable, risk-free basis. So it's very difficult for them to do any productive work or long-term work. Secondly, in this proposal, there is no requirement of interest rate policy. Why? Because in this system, the whole money, whether it is in the form of cash or digital money, will be under direct control of the state. Not a single rupee, not a single dollar can be added without permission, because banks have to maintain 100% reserve. And thirdly, no return without active investment. The money accounts, there will be two types of accounts in banks. One is money account, which is available for transaction, storing money. The other one is investment account, which is not available for payment, for earning payment, because your money will be transferred to some business activity, and from this business venture to even employee, and money is rolling like is circulating like a rupee, digital money. So no return without active investment, no profit or interest on money accounts. Deposit banking is like a contract of amana. Bank cannot lend or invest money without information to you. It may be possible that the banks, like current venture capitalists, current mutual fund system, they can offer you two, three type, low risk, high risk, or but there is a contract of amana. Okay, you will have to surrender your money. This money will be transferred either to low risk portfolio or high risk portfolio, and then bank invest. You have to take the risk. In present system, when we are depositing money, we are not taking the, which is the main requirement of of Islamic finance. You return should be given to a person who is taking the responsibility. So in investment section, basically those who are people who are taking the responsibility, who are taking the risk, they will surrender the money and then bank will invest it. So the position now, this proposal is basically removing the structural problem of modern economic issues, rising debt, continued inflation, financial fragility, economic instability. And this book has been written by me and one of my friend who is advisor in Central Bank of Bahrain, and 20 plus people who have reviewed it. So it's not a it's a mainstream solution. And now I would like you to raise any question if you want. Thank you.
Okay, Mr. Qanit Khalilullah. Thank you very much for the explanations related with uh, your book. The
This book
topic
is
is
available for free download at price.org.pk. So you
okay.
can download it free.
Okay.
We have written this book with a cost. So there is no hard copies available with cost, but digital copies available, freely available.
Okay.
And so an extensive referencing is available. Whatever we wrote in this book, it is properly referenced. Although we are chartered accountant, but we try to make it as sound as possible.
Okay, thank you very much. For our audiences, Mr. Kanit, there are some viewers, some audiences who want to ask some questions to you. Let's take a look the chat column. Wait, hang on. Let me see one by one. Okay. Okay, the first question is from, hang on, kok kurang begitu jelas ya ini sebentar, sebentar.
From Ani Gita from UNZAH Genggong, Sister Husnul.
Okay. Okay, Mr. Kanit, let me try to translate the questions from Indonesians. Ya, saya translate aja ya Mbak Nisa ya, ini Bu Nisa.
Yang Ani Gita in English, Mbak Husnul.
Iya, makanya saya translate ke Inggris. Ini pertanyaannya, Indonesia memiliki visi ya menjadi pusat ekonomi syariah dunia. Okay, the first question is about from Ani ya. Indonesia has a vision to become the Sharia economical Sharia, the center of economic Sharia in the world. But today, our Sharia banking is still um, is still suspected, we still adopting some conventional banking structural. The question is the industrial of Sharia banking in Pakistan is brave enough to be the pioneer of account investment system, which is pure based on risk sharing, based on your book? Is the risk and also is the risk to the competitions power with the bank conventional with conventional banks? Does it have risk competition with the conventional bank?
I think in Pakistan situation is very similar to Indonesia and many other, in other countries where Islamic banking is, running, is doing work alongside with commercial conventional banking, and but it's growing fast. I think 25 to 30% of banking has been transferred from Islam to commercial conventional banking to Islamic banking. And I think as per the Supreme Court law, within 2 years, other bank will have to be transferred on Islamic mode of financing. But in this book, we raise a different thing. We raise that Islamic banking in true sense, according to Maqasid Sharia, will not be possible without removing the money creation right of the private sector, unless and until this the main crux of the problem, the bone of contention has to be removed. Otherwise, we can do other things, but we have to challenge the base. So in this book, we challenge the major issue with the banking, which is creating economic, social, moral issues which can be described as zarar, gharar, or maybe, in my opinion, in the book we discuss in a very detailed manner that this fractional reserve banking, where you are banking are creating money, whether they are making investment, including Islamic banks, whenever they make investment, or they make some people say that this is only a contract change, but in both cases they create money. Why? Because same reserve requirement are applicable on them. In Pakistan, 5% reserve ratio have to be maintained by commercial bank, and same is applicable on Islamic bank. So when Islamic bank give any profit in the form of maybe on mudaraba to the deposit holder, it means that they are creating new money. When they are creating new money, this is a problem. And unless and until this main problem is resolved, it will be very difficult for any system to run on profit and loss, real profit and loss sharing basis. Because this base is fragile. Base is 5%. And if you transfer this sovereign right, as I said at the start, like defense, like dispute resolution courts, money creation is a sovereign right which has been transferred from private sector, from government to private sector during like 60 years, and we are not able to recognize it because gradually transactions are being transferred from hard money to banking numbers. So this problem has to be resolved. But in my opinion, as far as my knowledge, I think our banking sector is very similar to Indonesian system.
Baik, jadi tidak jauh dengan sistem perbankan di Indonesia ya, di Pakistan ya. Mungkin Bu Nisa bisa menambahkan dengan apa yang dijelaskan oleh Mr. Kanit. Ini pertanyaannya banyak, ini waktunya
Iya,
sedikit
iya.
sekali
Lanjut,
ya.
lanjut, lanjut pada pertanyaan. Nanti didiskusikan di kelas saja sama
Iya,
para dosennya.
jadi di sini sebenarnya saya sempat mencatat beberapa poin, tapi ini waktunya panjang sekali ini apa banyak ini narasi penjelasannya, tapi waktunya nggak cukup ini sepertinya. Oke, now we go to the next question. Thank you so much, Mr. Kanit. Wait a second. The second question is from Oh, tadi itu sudah Mbak Ani sudah diterjemahkan. Oke, from Anissa Nurlaila. Oke, this book just a second. Provides a very good transition simulation for the domestic context of Pakistan. However, let's look at the geopolitical reality. The currencies of developing countries like Pakistan or Indonesia are not hard currencies like the US dollar that everyone seeks. Our economies are highly dependent on foreign investment and international trade. Yeah. If a developing country unilaterally implement full reserve banking, which limits capital flexibility. How does this book proposal mitigate the risk of global markets? Yeah. Attacks in the form of mass capital flights and unwritten sanction from the still fractional based global financial ecosystem. Wouldn't the proper wait, wouldn't the proposal of this in this book actually trap developing countries into fatal economic isolation, sorry.
Basically, the full reserve banking is addressing the problem of domestic currency. Okay? Domestic currency, because when you go out from Pakistan or you go out from Indonesia, the import and export are being done in dollars terms. No one is interested in rupee or Indonesian own currency. The problem which is creating by the inflation, inside the inflation, it's our domestic problem, because central bank is creating banks are creating money, and this is widening the inequality between Pakistan rich and Pakistan poor people. It is nothing to do with international, but in Pakistan, because we are in the IMF program, so even domestic issues or domestic problem will have to be discussed with them. Not Indonesia is not in the IMF program. They don't need to, because if in external front, you need to balance your import and exports in dollar terms or in foreign currency term, yuan terms. So if you are doing this, no one is interested inside the domestic, and they cannot influence you, because it's an internal problem. Domestic currency is an internal problem. But full reserve banking will result in a sound money. Presently, Pakistan rupee is depreciating by 15%, because of inflation. Compared to dollar is 7%, because dollar is being printed by 7% and we are printing 15%. So there is a depreciation in Pakistan rupee. Once we have a sound money, which is backed by sovereign money, and which is linked tightly to the real production, the money will be more sound. So on international terms, on international front, our currency will be considered more sound. So I concluded that this problem is not relevant with your external front. External account is being affected by your import and export. Here, your internal problem, where government is taking loans, or the people are looking taking loans, this rich people, and this creates new money. This creates inflation inside the economy. If you are printing more, if your money supply increasing much higher than dollar, your currency will be depreciated. It's a very common sense issue. So, and this proposal which we have given for Pakistan, particularly, we initially were thinking to discuss Turkey as well, because Turkey, there is a huge issue in Turkey. Maybe in the second edition we will discuss Turkey as well. But for Pakistan, this proposal has been taken from an IMF paper in 2013. Although it's not an IMF official policy, but two economists have written a very detailed paper on the basis on US, because this problem is also US and the other advanced countries are also facing. There's a ticking time bomb in US. They have a sovereign debt of $39 billion. Their interest cost is higher than their defense expenditure, which is 800 billion rupees and equivalent to 30 more than the next 30 countries. But their interest cost is even higher than defense expenditure. So the government debt, persistent inflation are issues across the world. It is not limited to developing countries like Indonesia, like Pakistan. They are applicable across the world, because money is being created. But here in Pakistan, government is mostly in debt. In America, household debt is very higher, which is, as I presented in this presentation, 50, 60 years back, people are living their own houses. They don't have so much debt, almost negligible. But now their household debt has increased to 70% of the GDP, which is huge.
Okay, thank you. The next question is from Roni Adiwinata. He gets confused, about the explanation about how bank creates money. He doesn't understand about that statement, and how the loan the total amount of money spread out?
I think this is a very straightforward process, but as you know, 90% people in the world, they don't think so. Otherwise, if you go to Bank of England paper, you can see any economic book, money multiplier creates money. The process is very clear. If I go to the bank and I deposit 100,000 rupees in a bank keep 5% in cash, so that if I go to ATM, I can take some money. And 5% in state bank, and they loan out the 90,000 rupees. This is a standard business practice. And they loan out, how they loan out, they put the money in someone else's accounts in numbers. I have 100,000 rupees and 90,000 rupees have been given to someone else. Money
Yeah, yeah,
doubles. Who
yeah.
created this money? 90,000 rupees is a bank created money, because bank has only 90,000, 100,000 cash. And
100,000.
this 90,000 rupees, the borrower, he took loan for some expenditure. He paid the money to a vendor, to an employee. Then this money again reaches to another bank, and that bank repeat this thing. 5% cash, 5% state bank, or the central bank, and they extend a loan of 80,000 rupees. This process goes on. On the one side, banking are creating money in their account in double entry system. If those people who are accounting background, they put the money in their deposit account. If this money is not credited or reduced from someone else's account, bank create fresh new money. And on the other side, they book a loan which will be paid after a year, after 2 years. So in this manner, banking industry as a whole is creating money all for intent. If there is a 10% reserve ratio, they can create 10 times money. In Pakistan, we have checking accounts of 30 trillion rupees, whereas a bank has cash of around 2 trillion and 2 trillion in a state bank. So wo same ratio, they have 5% in cash, 5% state bank, the remaining remaining money in numbers. Same like same like of these goldsmith, who issued more receipts compared to the coins they have. Now the banks are not issuing receipts because creating money or printing money is prohibited. You will be in jail if you create a new printed note. But they are creating money in terms of number which are more powerful, because velocity is high. I can make up, as I said, I can make a payment up to Indonesia through my deposit account. So velocity is high. So in the present system, more than 90% of the money is being created across the world by commercial bank whenever they issue loans. And the proof is very clear that when they issue loan, no one account is credited or reduced. They create new money in numbers,
Yeah.
and they put into your account.
Okay. So the bank creates money, new money, when they give loan, to the account of the customer, of the clients. Okay, next questions. Ibu Dr. Hairunisa, mohon izin, ini kan pertanyaan banyak sekali. Bagaimana, dari tadi kan saya hanya membaca ya. Kalau yang raise hand ini ada 2. Apakah saya tunjuk yang raise hand dulu? Biar.
Yep, please, Sister
Okay.
Nurul.
Sepertinya tadi dari Stai Al-Utsmani, would you please, time is yours if you want to ask some questions. Silakan dari Stai Al-Utsmani.
Okay, thank you. You giving me the opportunity to ask a question. So, a debt-based money creation system occurs when bank creates money to loans. When someone borrow money, the amount of money circulating in society interest. So, richer people or large companies usually have either access to loans, use them for investment or business, allowing them to give more profits. Meanwhile, lower income people often borrow money for daily needs and must pay interest. As a result, those who already have capital become richer, when a poorer people find it harder to improve the economic conditions. Therefore, the system considered capable of feeding the wealth gap in society. So I will questions, why is a debt-based money creation system considered capable of widening the gap of will inequality in society? Only there I will questions.
Okay, you can directly answer the question, Mr. Qanit. Thank you so much for
I
the
think
question.
the whole presentation I discussing the same thing. When banks are issuing loans and they are creating money, because the structure is that deposit money is safe, considered to be safe, and it is immediately withdrawable. So the most of the money banks creates, either it goes to the government, they purchase government debt. In Pakistan, most of the during last 3 years, additional loans which have been given during last 3 years, 98% to the government just to pay interest. And in Western countries, 85% of the money goes to real estate to increase the prices of houses, which are now unaffordable. So the structure of when banks are creating money, productive investment is less. And this money goes to the large corporation, which have huge capital buffers. And this increases the wealth concentration. Why? Because when you are increasing the money under the profit motive, it is continuous process. So you know money value will be reduced after a year. It's better to take a loan. Loan is not available to everyone. It is available to banks. It is available to rich people. A very rich people, most wealthy people in the world. Elon Musk, he has wealth of around 6 dollars, no, $600 billion, and he purchased a house during this year with the bank loan because he knows that house price will increase and the debt price and the money price will reduce. So in stock exchange term, they are shorting the money. So rich people are taking have the access to the money supply, and as a result, this money is putting tremendous pressure on the one side in terms of inflation to poor people, and on the other side, it's providing huge leverage to the rich people to increase their asset levels. And this wealth disparity, which I showed, 1% people have 40% of wealth, and in the down bottom 50% have only 1% wealth, is a direct result not of capitalism, not of market economy. It's a direct result of money and taxation system. And Islam has given both sides against taxation. It is given a zakat-based system, and money a real elimination of riba and exploitation. It's in this book we discuss this fractional reserve banking is a modern manifestation of riba, because here we are not talking about 5% or 10% interest. The whole money is being created out of thin air. The whole money is being created out of through accounting entries along with that. And Nabi Kareem Sallallahu they he discouraged very severely about the debt, and our whole system in Pakistan, government, businesses, huge businesses, and household across the world are working on that, and it's a natural phenomena. Why should we give a moral, sovereign right to the commercial banks? Investment is possible. There is no reduction in investment in full reserve banking. Why? Because when you eliminate the government debt, the government banks have more opportunity, more finances to give it to the commercial, to the productive investment. And this the amount which has been taken in investment account, it is for investment. So in Pakistan, we showed the investment account for productive investment will be doubled in case of Pakistan, and same is available in IMF paper for US, where investment productive investment will increase. But you will have to the investment people will investor will have to surrender their money. Bank will not be able to create money nowadays when the interest rate are low. Bank give money, and many investment are made which are not feasible because they are not based on real savings. Ultimately, when prices increases, this central bank increases the interest rates, and this investment will become not feasible. And this is creating boom and bust cycle across the world.
Okay, thank you so much for the explanation, Mr. Qanit. Now we
Thank
go to
you.
the next question. Questions, Miss Fitria. Ini dari tadi ini sudah angkat tangan. Okay, please. Hello, Miss Fitria, are you still with us?
Yeah, yes,
Baik,
of course.
silakan.
Hi, hi everyone. My name is
Hello.
Fitria. I'm currently in my fourth
May I
in my
know where
fourth
are you
semester,
from?
majoring in Sharia Economic at
Mhm.
STI Al-Utsmani.
Okay.
I'm from STI Al-Utsmani. Thank you for the chance to answering my questions. I would like to ask, uh, just know, at the point 5 on your third slide mentioned about world concentrations. In Indonesia, we see a wide gap where access to new money from banks is enjoyed only by a few, while the general public bears the burden of the resulting inflations. So, my question is, how can you prepare your purpose for reserve and zakat-based economic model systematically redistribute wealth so it doesn't just stagnate at the top of the economic pyramid? So
I think
that's for me.
okay. I will give you the answer. Basically, there are two systems. One is the fiscal side. Through zakat is a major tool of Islamic economics to distribute wealth from rich to people. 2.5% on wealth and 5 to 10% on production on the basis that labor is employed or not. And Dr. Yusuf Kazavi has written a very good book, Fiqh Zakat, on the modern implementation of zakat. This is not the topic of our book. In this book, we discuss the monetary side, the money creation phenomena which people don't know who is creating, who is distributing. The present system where money is being created with debt, the debt is available to rich people, the large corporations, and our system is skewed heavily towards debt, because when the large corporation takes loans, they get tax shields, and in case of profit, they will have to pay more profits, more taxes. So in this system, the money is available to large corporation, to rich people, and money is power, money is blood. So when they receive money early, they are able to purchase assets. Their asset prices increases as a result of inflation, which undoubtedly provide benefit to rich people. And on the other side, those people who are fixed income, they are in a very bad shape. Full reserve banking system, change this phenomena. First of all, money creation will be tied up with real GDP production. So no saver money, no fixed income money will be diluted. There will be no stealing of money from a worker's salary. There will be no demand side inflation. Secondly, the money which will be given for investment purposes. Presently, this money is going only to government, only to real estate to increase the prices. In our scenario, when the people invest, this money will go to the productive investment with risk. So it will, create more jobs compared to the current banking system, more economic activity, which ultimately provide benefit to the lower class, and it will reduce the wealth inequality, most importantly, and inequality, and increase the economic activity, because bank then will are true intermediaries from investor to productive investments, instead of making providing loans to government and real estate in the West.
Okay, thank you for the explanation, Mr. Kanit. Eh, Bu Nisa, kira-kira sampai jam berapa bisa saya lanjutkan ini karena questionnya sangat banyak. We still have 8 questions on the chart.
I have written in the chat column.
Oh,
Please
is
give the
it?
next question to Brother Ali Ridho, and inshallah we will finish the Q&A at 11.
Okay.
10 PM.
Okay. 10
If
past. Okay,
if
10
you
past 11
if
ya.
your audience,
Okay, 10 minutes more.
if your audience read this book, and then you can have another session some after a month or
Okay.
two to discuss about
Okay.
to raise questions.
Okay. Silahkan Mas Ali Ridho, Mr. Ali Ridho from UINHAS Jember.
Yes, thank you for the opportunity. Hello, Mr. Qanit. I hope you are always in good health.
Amin.
The explanation is very interesting that the majority of banks in the world use a fractional reserve system, as well as in Indonesia, with the number of commercial banks reaching 105 institutions based on Statistik Indonesia in 2023. And based on Financial Service Authority or OJK, data in June 2025, the amount of credit from general banking will reach 8,000 trillion rupiah, or the equivalent of 40 for 450 trillion dollars. My question is, how can we deal with this wave of protests from banking institution, because they will certainly have the potential to experience a very significant decline in profit, and with those facts, how to adopt the system to Indonesia banking system? Thank you.
You have a concern about the banking industry profits? Huh?
Yes.
Okay. We discuss in the third chapter in a Pakistan case what will be the impact on the banking industry on taxation side, very detailed transition plan. And you can see it same, I think similar things will be applicable in Indonesia. But the situation is the solution is very clear. In this bank, we are not, eliminating the banking. We are making banking to a more responsible institution. The one side is a money or deposit banking. The banking industry on the money side, they don't need to pay any interest or profit to the depositors. Why? Because there is no return on money without investment, without risk taking. Okay, and they can charge one to 1.5. In our proposal, they can charge 1% fee per annum on the deposits. In Pakistan, we have 30 trillion rupees, so they can earn 300 billion rupees through this, which is around 40 to 50% of the current banking profits. Secondly, in Western side, the most banking revenue is coming from not from transactions, not from deposits, but from coming from investment side. So the real banking sector, where the real banking work is investment. Investment banks are highly paid. So the second section, which is the investment bank, they invest money into the businesses, but on the basis of real savings. At the transition, you will say that all checking account will not be given any profit or interest. They are just like cash. Sovereign money will be available both in form of electronic money, bank money, and cash. So there will be no profit. So many people in Pakistan, we expected almost 25-30% people will transfer from their money from their deposit account to investment accounts. Okay, and this investment will be real investment into productive investment, and this will provide banking industry the real saving opportunity, real earning opportunity. As digitalization is getting momentum, the branch network, I don't know about not know much about Indonesia, but in Pakistan we have in a market nearby my house 15 bank branches are available. And there is, but with digitalization, this branch network will be reduced. That is nothing to do with with the proposal of full reserve banking. Full reserve banking will enable banks to earn on deposits as a 1% or 1.5, and they are monopoly on payment mechanism, so they can earn some commission from customers as well when they are making payment to some big hotel, some big chain, so they have some earning from them. But the real real earning will be coming from the investment side. Investment which is on real saving with risk. Presently, bank are not making investment, they are creating money, And when they are creating money, they will have to return along with fixed return. Whether you show it in profit, whether you show it in interest, they will have to pay fixed interest to their depositors. So invariably, they put their money into safe avenues like government securities, real estate in the West, and it is very. I mean, in Pakistan we are seeing the commodity price increases, inflation, but in the West there is another side. Their prices of houses have increased tremendously. It is unaffordable because 85% of the bank money is going into real estate mortgages. So the whole system, if when it come, it will be returned to sovereign, and it will be based on real saving. The bank will be able to earn profit, but their profit will be conducive for economic growth, not for harming the economic growth or economy and people.
Thank you.
Okay, thank you very much for the explanations. Bagaimana Mas Ali Ridho sudah ya? I think this is the last question for our question and answer sessions due to the time limited. I do feel sorry, Mr. Kainit. Actually, we still want to have more time to discuss many things with you, dealing with your books and also the topics today. But unfortunately, because this is Jumat, this is Jum'ah, yeah, we need to prepare a Jum'ah prayer to after this.
I understand, and I'm saying I have given you an option. If people read it, and then we can have a session after a month to to just to queue for Q&A. So those
Okay,
people
okay,
understand it.
okay.
So we
Thank you
will have
so much.
sufficient time for Q&A, and these questions will be based on our actual book and actual findings. So it will be more, constructive, conducive for both of us.
Okay, thank you so much. Well, ladies and gentlemen, alhamdulillah ya, sudah selesai. Ini sesi presentasi bedah bukunya beliau ya, bagaimana beliau memiliki konsep-konsep perspektif terkait dengan bagaimana sistem ekonomi dan bagaimana seharusnya alternatif bebas riba itu yang seperti apa. Terus bagaimana bank itu tidak hanya apa ya memberikan pinjaman tapi malah memunculkan inflasi-inflasi yang lebih dahsyat lagi. Okay, thank you very much to Mr. Qanit Khalilullah, LCA, for the enlightening and thought for the presentation. We have certainly gained valuable perspective regarding the challenges of modern economic systems and also the importance of promoting ethical and interest-free economic alternative. Yeah. Sekali lagi juga kepada IAEI Jawa Timur, terima kasih UINHAS, IO UINHAS, FEBI ini Ibu Dr. Hairunisa dan semua partisipan yang telah hadir di sini dari berbagai universitas, juga mahasiswa-mahasiswa yang hadir pada hari ini. Thank you very much for your participation, attention, enthusiasm throughout this event. So I hope that today's discussion inspire meaningful academic dialogue and also future collaborations. Yeah. Me, Husnul Khatimah, as the host, I would like to apologize for any shortcomings. Ya, Subhanallah, Subhanakallahumma wa bihamdika asyhadu alla ilaha illa anta astaghfiruka wa atubu ilaik. Wallahumma waffiq ila aqwamit thoriq. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam.
Waalaikumsalam
Waalaikumsalam
warahmatullahi
warahmatullahi
Thank you,
wabarakatuh.
Mr. Kanit.
Thank you, thank
Thank you
you.
so much.
Mungkin foto dulu Bu Nisa atau bagaimana?
Sudah difoto sama saya.
Oh, Masya Allah.
wabarakatuh.
Okay, thank you so
Terima
much.
kasih Bu
See
Nisa.
you again.
Nurul.
Thank you. Ya, sama-sama semuanya. Terima kasih. Sehat selalu.
Assalamualaikum.
Assalamualaikum.
Ibu-ibu.